When faced with financial uncertainty, whether it's due to job insecurity, loss of income, or a situation resembling a recession, many individuals tend to adopt a cautious approach towards managing their money. They shift their focus to playing it safe and maintaining their financial stability until circumstances change. While it's prudent to be cautious during times of uncertainty, most people tend to put their financial planning on hold. However, hitting the pause button on financial planning doesn't put you in a favorable position to emerge stronger from these uncertain times. In today's video, I'll be sharing valuable tips and steps to consider when approaching financial planning amidst uncertainty. So, without further ado, let's delve into it. One essential step in navigating financial planning during uncertain times is to revisit and create a budget. If you haven't been using a budget, it's time to start. A budget helps manage your money, control spending, and uncover potential areas for savings. If you already have a budget, consider reviewing it to identify areas where you can cut back on expenses. A well-planned budget is key to detecting and reducing excessive expenditures. Without tracking your expenses, debt payments, and household income, managing your finances becomes challenging. Regardless of the method you choose, such as the envelope system, an Excel sheet, or a budgeting tool, creating and sticking to a budget allows you to identify areas for improvement. Effective expense planning doesn't mean drastically cutting your expenses. It's about better tracking your spending to make informed financial decisions. By monitoring your expenses, you gain insights into where your money goes, especially during uncertain times when unexpected events may occur. Keeping a close eye on your finances is crucial for financial stability. Once you have created and reviewed your budget, the next step is to track your spending. Tracking your expenses involves carefully identifying and recording your expenditures throughout the month. Although it may initially seem like a lot of work to itemize your expenses, understanding the importance of tracking and adopting efficient methods can help you commit to the activity and develop a heightened awareness of your spending habits. During uncertain times, households need to reevaluate their finances and prioritize expenses. It's crucial to determine what is essential and distinguish between wants and needs. Finding ways to reduce discretionary spending, such as entertainment, new clothes, or takeout, becomes essential. While these things hold importance, it's necessary to postpone them until stability is regained. Review your financial accounts and pinpoint areas where unnecessary costs occur. Consider reducing or completely eliminating these expenses. Additionally, it's time to cancel any monthly subscriptions that are no longer being utilized. Start by creating a list of your necessities and diligently record your daily expenses. Categorize your expenses into wants, needs, and savings. If a significant portion of your expenses falls under wants, it's recommended to reduce them and allocate more towards your needs and savings. Building and strengthening your emergency fund is crucial, especially during uncertain times. If you don't already have one, now is the ideal time to start. Emergency funds are designed to provide an added layer of security in case of unforeseen financial emergencies. Having an emergency fund equivalent to 3 to 6 months' worth of expenses offers a safety net for covering essential household bills when your income is suddenly disrupted due to illness, job loss, or other circumstances beyond your control. These funds serve as a vital resource during challenging times. If saving for an emergency fund proves challenging, consider setting up automatic monthly transfers into a dedicated savings account. This ensures that you consistently build your reserve over time. To prepare for uncertainties, increase your income with a side gig. It supplements your earnings, strengthens the emergency fund, and diversifies income streams. Saving alone isn't enough. Combat inflation by finding a side job, seeking promotion, or starting a business. Multiple income sources are vital for future uncertainties, reducing dependence on one. If your main job falters, the side gig or business becomes a backup income and vice versa. Diversifying income ensures greater financial stability. Once you've established your emergency fund and have insurance coverage, it's time to focus on growing your investments. Start by determining your risk appetite. If you're a beginner or prefer conservative investing, consider low-risk investment options. Fixed income securities, for instance, provide a stable source of income with the principal amount returned at the end of the term, regardless of market fluctuations. This offers a reliable passive income stream with minimal risk. On the other hand, if you're an aggressive investor, you may explore stock investments, which have the potential for higher returns compared to bonds or high-interest savings accounts. However, it's important to note that the stock market is highly volatile, and there is a risk of losing your investment. Carefully weigh your options and consider seeking professional advice before making investment decisions. To effectively plan and adjust your financial journey, it's essential to revisit and reassess your financial goals. Take a moment to write down your top 10 goals, encompassing both short-term and long-term aspirations. Consider which goals hold the greatest significance to you, whether it's saving for retirement, debt repayment, or other objectives. Prioritize your goals, establish targets, and diligently track your progress. Financial planning provides an opportunity to formally review, update, and measure your progress toward your goals. If you haven't set goals before, now is the perfect time to formulate them. Doing so will provide a solid foundation for your financial well-being, particularly during uncertain times. Securing adequate life and health insurance coverage is crucial for safeguarding your family's well-being during unforeseen emergencies such as health crises or the loss of a breadwinner. These situations often cause immense worry for families. Insurance plans help mitigate the financial burden and vulnerability faced during such challenging times, as exemplified by the recent pandemic. By having secure employment and appropriate health insurance for yourself and your family, you can maintain stability without the need for drastic lifestyle changes. Maintaining a strong credit score is crucial for accessing credit when needed. Even if you currently don't rely on credit for purchases, changes in your financial situation may require borrowing in the future. To prevent difficulties in qualifying for credit, it's important to proactively improve your credit score before it becomes necessary. Ensure timely bill payments, reduce credit card balances, and regularly review your credit report for errors. This proactive approach establishes a solid foundation and positions you favorably for future credit needs. Interest rates have been rising across various financial products, making borrowing more expensive. However, a higher credit score can help you qualify for lower rates when applying for new credit or refinancing existing loans. It can also reduce your monthly payments, freeing up cash for savings or other purposes. During uncertain times, prioritize debt repayment to ease financial stress. Focus on debts with the highest interest rates to minimize long-term interest expenses. If interest rates are similar, start by paying off the smallest balance, then apply that monthly payment to the next smallest balance. While immediate debt payoff may not be feasible, you can still reduce interest and lower monthly payments. Consider loan refinancing for better terms and consult an expert for guidance on associated fees. Debt consolidation is another option, merging multiple debts into a single payment at a lower interest rate. By managing your debt strategically, you can make progress in reducing financial burden and improving overall stability. Planning for uncertain times can be overwhelming, but you don't have to go through it alone. Seek help from a financial expert, such as an accountant or someone in the financial services industry, who can guide you through the process. You can also consider trusted family members or friends for advice. Don't wait until your finances become problematic to seek assistance. Consult with a financial expert to review your current situation and receive recommendations on adjusting your financial plan to address your concerns. By becoming more mindful of your spending, reducing costs, and increasing savings, you can make better financial decisions and secure your family's future. While it's impossible to predict every crisis, being proactive allows you to prepare for potential challenges. A financial plan keeps you focused on long-term goals, ensuring that short-term obstacles don't derail you. By taking necessary steps and seeking support, you can face uncertainty with greater confidence and resilience. Remember, preparing for the unexpected is the key to navigating uncertain times without being overwhelmed. Thank you for watching. Don't forget to subscribe if you're new here. Have a wonderful day and see you in the next video.